Hi guys, John here, Mr. Forex Fire, and it was brought to my attention the other day about limit orders and stop orders. What are they? How do you do them? And what is the understanding of them? Okay, so this is just going to be a short and sweet, brief video explanation and training. A few of you may already know what these are, but this will actually help others that are a little bit uncertain. Okay, so I'm just going to share the screen. And yeah, we're sharing. Right, let's just get that a little bit bigger, get my handsome face wider. Right, so what we've got, okay, we've got limit orders, which is basically you're expecting a reversal, right? It's a reversal in price, okay? Fat fingers. So it's a reversal in price from where it bounces off a predicted area, and we'll do a visual explanation in a moment. A stop order is where we are expecting a continuation of price through a certain level. Okay, so this is what these things are. We'll just get this and we'll get the box. Right, so for example, we speak heavily in the group about things like when we get a break of structure. Okay, we get a break of structure and we are waiting for price to come back to the previous order block of structure, then bouncing from that level of area in the order block to continue to the high. Okay, so just to give you an explanation, we've got liquidity here. Okay, so if we put the replay tool here, okay, so we've got a liquidity area up on the top. So at the moment, liquidity is residing here. So if, excuse me, if we play the bar forward a couple, okay, now as this comes down, at the moment, we've got a price range. Okay, there's a price range there. There's a swing point has been formulated. Okay, as we go forward again, we've had a break of structure. So what's happened is price here has broken that structure, making this an invalid area. Okay, so it invalidates that. So what we do then look at is possibly this sort of stuff, especially when we're scalping and we're using these. Okay, so what you could do, that's the last down before the up sort of area. Okay, from there you could say, right, well, I'm expecting here long, so you're putting here long, so this would be here limit, a buy limit, because we're expecting it to come back down and then go long. So as we put this into here, okay, and we play this along, prices started to flag back in. Okay, let's let price do its thing. Let's get rid of that. And it's tagged our area that we're expecting it to come back into respect. And then what happens is it starts its move. Let's just see where we are. started to move, obviously price is finished at the moment, but it would start to move, and we would expect this to bounce back up to here to meet the requirements of that liquidity area. Because once you've taken the breaker structure here, this is now then became the liquidity area. So we would anticipate a move up to here. So that is what we call here a limit order. It's where we are expecting a reversal on price. So as the price is starting to come back down, it's respected into this order block. So this would then become, in essence, what we would call a buy limit. Okay, so that would be what we call a buy limit. Now, if this was, let's get rid of that. If we were looking for a sell limit, let's get rid of some more of these. Now, price is moving down at the moment, okay? If price was to come down, let's say a break structure of here, okay? Because we have liquidity here as well. Because we have a range on the top as well, okay? If price was to come down and break structure of this and clearing out all of that, okay, based upon our scalping, we would look for the last up before the down. This is on the 5 minute. So what we've been doing on the 5 minute is possibly doing the halfway area. Okay, you would put a short, have your swing just above the high, and then have your target down to the bottom. So what then we are anticipating then is a sell limit. So we're waiting for a reversal in price to come up to mitigate our order block area to then carry on down to hit liquidity of the downside, giving us the money. Okay, so then that there would then become the sell limit. Only a sell limit once the downside was broken. Okay, these are what we would call limit orders. Stop orders. Let's say a price continued and continued and continued and continued down, you would simply be then looking and anticipating areas. Let's take a look. Like this. Okay. If the areas start coming through, crashing through these, we would then start to maybe looking for stop orders. Again, you'll be selling in this instance. Okay, and we'll just get the sell on here. So let's say we had 50% of that area, and we've got that protected higher there, and you were going to target 50% of the other block here. Let's just say, just for an example, okay, and that there's a healthy 1 to 2.35. So let's say there was a heavy push down in price. Right, so again, we come down, we come up, we come down, we come up, and let's say this does not enter on our limit order where we were anticipating price to come down. Now, if price was to keep pushing down and pushing down and pushing down and break through this structure, this would then say we were not looking at this as an entry on a sell limit, simply because we broke the structure. As it comes down and breaks the structure on the higher, the higher low, okay, on here, and it still continues, we could then start looking at what we would call a stop order. And a stop order is where you are basically getting a drive of price and it's a continuation down or maybe up, depending on the trend. So let's say again, you've missed your entry where you were anticipating the price to come up to here, and you've missed this by, let's say, 5 pips, and then you start getting the price moving down. You can anticipate a break of structure where, looking back on your sell limit and it didn't hit, you will be starting to look at areas where it breaks structure, and if there's a strong move or a strong momentum of trend shifting to the downside, you can start looking at these, what we call pullbacks on the way up, as areas of big order blocks to be a halfway point to make this a sell stop. Okay, now when we talk about sell stops, so that would be sell stop. Now what happens is, once price comes down and it mitigates through our order block here and it pushes through here, okay, the order will then become activated. Okay, it becomes activated. It will not activate until it physically goes through this price area being 1.35172. If this was to come up here and then drive back up, it is not activated until price physically comes through here. Okay, once price gets through that area, okay, once price starts to move through here, if this decides to come back and hit that area, that is where we would be stopped out. Okay, however, if the price was to reverse and stay within the red and then continue to come down, okay, continue to come down, so you had a little bit of drawdown, you would have had your maybe 50% of the next pullback as an area of importance for the price to come and mitigate to. I hope that makes a little bit sense. Let's see if we can find a buy limit and the buy stop, and then I'll put an explanation in the area. Okay, let's take a look. Just have a look on price. Oh. There we are. So that's a good example, right? So again, we've got on here, we've got liquidity. Okay, this is our 5-minute base level. Okay, we've come up. We've come up, we've come down, and then we broke structure on that point. Okay, so on here is where new liquidity lies. This one here becomes our break of structure. Okay, let's get this back on, John. We are then looking for a limit order of a buy based upon that structure there. Okay, the body, that there below the swing point is the risk. Okay, around about 3 pips. You would then be looking for liquidity there, which is a nice 1 to 4.61. However, you will see if you look to the left, because we've had a big engulfing candle, I would have possibly have thought, let's target the higher side because of this big engulfing move. That there was a beautiful 1 to 16.73. Now that there becomes our buy limit. That's correct. That there is a buy limit, simply because we've anticipated the break of structure. Okay, liquidity on the high side. Our entry area is in here, so we are waiting for a price reversal So as it flags down to touch into the entry area, this will become your limit order because price is coming down, ready to respect an area to then make that reversal back up. Okay, so again, if it's a sell, you're waiting for the price to come up to the higher price, hit our entry for the price reversal, which will be a sell limit. If the price was a buy limit, you are waiting for the price to start coming down to the lower price to hit the area where we're expecting it to respect. When it hits that, that is where we are expecting the reversal of price to do your buy limit. Now, again, your buy stop, okay, we speak heavily again, this here, let's take a look. This here is obviously being met on there. Again, because we've had the drive in price pushing up, we could anticipate once this has a break of structure, and again, it's just an example, when we get a break of structure over there, you can see where we've had a strong uptrend here. We can look at maybe something, I mean, it's obviously it's a few more pips than what we would anticipate, to be fair. We can see, well, maybe this here is where we would look for that higher side, okay? As we look left, we would say price, we are not wanting to get in on price until there's been a shift up to the higher side. This would not become active until it breaks structure of these highs, if that makes sense. So again, this was to come up until our stop order, our buy stop in this instance, until it hits here, this level of 1.36895. That is the area of entry. That's when the buy stop will become activated. If price was to come back in here, you're in drawdown, okay? Your price and your trade is still valid until it either does one of a couple of things. It comes up and it mitigates to our high side for our TP, or you can take partials on the way up on structure. If price was to come through and break through the area and price where you were anticipating it to smash through, giving you a buy stop, but then reverses on us like they say it in the pattern and comes down and then hits that area there, you will be stopped out on the risk to reward parameter that you had set. Okay, so then that one would then become our buy stop. Okay, so again, buy limit is where we are expecting a flag of price back down to an area to respect an entry, and then the flag to hit that entry to then bounce off the order or the price area to then do a price reversal, and that will be your limit order. A stop order, whether it is a buy or a sell stop, you have an area of importance where price is not yet met and you are expecting price to crash through the wall. Okay, so if you just imagine stop orders are a wall, okay, stop orders are a wall that you are expecting to smash through and continue in trend. Okay, I'll say that again. Stop orders are areas where you have a price which is just giving you a small wall where you smash through, it enters, and it continues in price. Limit orders is like when you are holding a bouncy ball and your floor is the area where you are expecting the price to sort of stay at the lowest on a buy limit. That you're dropping the ball, the price comes down as in the ball dropping, the ball hits that floor and then it reverses. It reverses with momentum and it bounces up towards your TP. It's the same with a sell limit. If you've got the ceiling above you and the ceiling you're looking at right now is the price level where you're expecting price to go to at its best. If you were to throw a ball up in the air, it hits that ceiling. That's the limit of where the price you're anticipating to go. It then hits that ceiling, and then price will reverse back down towards your area that you're anticipating a take profit. I hope that makes a little bit of sense. Again, I will do some explanation and some sort of videos, or I should say some pictures within the modules, and I hope that makes a little bit of sense. If you need me to explain this in a bit more detail, or you want a more sort of one-on-one chat about it, then please reach out to me. I'll do that as and where I can. I hope that little bit of explanation today is giving you a bit more of an understanding, okay? But this will be in the Discord, and it'll also be followed up with some pictures explaining a bit more about limit orders and stop orders, okay? Thank you very much.